John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hello, my name is John Ulzheimer. I'm a consumer credit expert. I have almost 30 years of experience in the credit industry. I've worked for FICO, which is the company behind the FICO credit scoring system, and Equifax, which is one of the 3 generally recognized credit reporting agencies in the United States. So today I'm going to answer a question that I get from time to time, and it has to do with earning good credit. And this can be earning good credit out of the gate, when you're a young 18 to 21 year old, or rebuilding credit if you've gone through some sort of a credit, disaster like a bankruptcy or a loss of a job, failed business, a really expensive divorce. Any of those things, a death in the earning family, any of those things can really wreak havoc on your credit reports and require you to rehabilitate or rebuild your credit. And so the question is it's going to be a lot of work to do this. It's going to take years. John, you keep telling me it's going to take years for me to rebuild my credit. Is having good credit, is it really worth it? Can I still get by with not having to worry about having good credit? So I'm going to answer your question with 5 answers and try to convince you that it is absolutely worth your time to dedicate yourself for your lifetime to have, to earn, and to maintain not good credit, but excellent credit. And here's why, all right? So number 1, you're gonna have more borrowing power. You're gonna be able to borrow more money if you have good credit. Why? Because lenders are willing to take a chance on you if you've got good credit, because people who have good credit will bend over backwards to make payments on their obligations. So you're gonna have more buying power. What does more buying power get you? Well, you can borrow money to start a business. You can borrow money to buy a house. You can borrow money to buy a car. You're gonna have more buying power. That's number 1. Number 2, the money that you borrow is going to be cheaper, meaning that it is going to be less expensive for you to service debt. And that's going to apply across the board for all types of debt. But the 2 most expensive debts that most consumers incur during their lifetime is going to be their home and their car. And yes, I understand student loans can be very expensive because college is expensive. Borrowing money to start a business can be very, very expensive. But by and large, the most money that most of us are ever borrow is certainly going to be the mortgage, and certainly the auto loan is going to be up there as expensive debt. So we really want the interest rates on those debts to be as low as possible, because now we're talking about real savings every single month. As of the date that I'm recording this, you could get a 30-year fixed rate mortgage with good credit at less than 3%. You hear people talk about, historically low interest rates. This is legitimately historically low. Interest rates for mortgage loans really have never been lower in the history of history. So to the extent that you have good credit, you can borrow money to buy a house at a really, really aggressive interest rate. For some makes and models of auto loans, you can borrow money for free. I have a 0% interest rate on a truck loan right now. I'm paying 0 money to borrow money from my creditor. Nothing, okay? I have no interest rate because I have a 0% interest rate. So certain makes and models of automobiles have 0% types of offers, and that's generally going to be through the captive financing source. And so the manufacturer's financing arms like Honda Finance, Toyota Finance, Ford Motor Credit. So the financing arm of the manufacturer, because they make money on selling the unit, where a bank does not make money when you buy a car. They make money when you borrow money from them to buy a car, so they have to charge you interest. So the captive lenders can give you an aggressive interest rate of 0, but only if you have good credit, all right? So that's another one. So you're paying, thousands of dollars less over the lifetime of your mortgage, and hundreds, if not thousands of dollars less on the lifetime of your auto loan. Next, cheaper insurance. A lot of criticism. People getting really upset about the fact that insurance companies look at your credit reports. Oh my gosh, I'm so mad about that. Really? You know who you never hear a peep from? You never hear a peep from the people who have good credit and actually get cheaper insurance rates because of their credit. You never hear them complain about it, but you sure hear about people complaining about, my credit shouldn't influence my insurance. Well, that's people who have bad credit who are making those complaints. So if you have good credit, then your insurance is by and large going to be cheaper. Your premium is going to be less than if you had bad credit. No deposits. What do I mean by no deposits? So when you open up a utility, like a public utility like your water and your power and your gas and such, or if you go to try to lease an apartment, then there's a possibility that someone is going to ask you to make a deposit. Well, guess what? If you have good credit, they're not going to ask you to make deposits because you're a low risk user or tenant or borrower. So you can kiss deposits goodbye, but only if you have good credit. And then finally, jobs. Depending on where you live, it is very likely that the state that you're currently in right now will allow employers to pull your credit reports, not credit scores, that's a myth, credit reports, as part of the employment and pre-employment and continued employment screening process. Well, guess what? If you have lousy credit, then that can cost you a job. It's that simple. If you have good or great credit, you can remove that impediment and you're either going to get the job or not get the job on other merits. It's not going to have anything to do with credit reports. So to the extent that you and another applicant have exact qualifications, but you have great credit and they have lousy credit, you tell me who's going to get the job. You're going to get it. It's going to be the person who has good or better credit. So not only is it going to make your life easier, but everything that you buy that's important to you is going to be less expensive. And so I think the answer to the question, is having good credit worth it? It is 100% worth it to go through the effort to earn good credit initially or to rebuild your credit if you've gone through some sort of a credit damaging event in your life. If you have any questions or comments, drop them in the section below. I'll be happy to grab them. Thank you for watching. Have a great rest of your day and we'll talk again soon.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.